Yeah, the market's changed in 2025. Look at this. This is a weekly higher time frame chart we've already talked about in previous videos. You're the real ones that have watched them. That you got to look at the theme in the narrative, but this is the S&P 500 micros, and what happened here in 2025, the first week is sell signal because we had a candle close, this black candle below the mid Bollinger is 5932.65. That's not happened till when? Way back here in September, and we had some August, even the election. On the night of the election, the week of the election, we had these lows, which we haven't yet gone to the lowest low of that election. These are the dashed lines I've got, but we came pretty close so far this year. But the point I'm trying to make is this: weeks and weeks, months and months, you only had, if we did go down to the mid Bollinger, we came right back up and it was a one-way market. What I'm getting at is this: don't expect the one-way market for 2025. 2025 is going to be a two-way market, or if it's going to be anything one way, it could, for a time, be a down market. I'm not calling for a bear, and I'm not a perma bear. I'm just noticing and noting as I follow the price action with my trade plan. Even if I'm not got money in the market every day, I'm looking at the price action. The price action is telling me right here, the last 4 weeks, this is two-way and it's going down. But there is two-way action here. There's money to be made. But if you had a great year in 2024 and you're not doing so hot in 2025, and you're a trader and you're wondering what's going on, that's what's going on. So I'm going to go through the charts and talk about the causes. And we've talked about this. Mainly it's rates, it's the interest rates. The Fed cut did nothing. And we'll look at the yield and what's happening here as I speak to you. We're in the afternoon, and it is still a couple hours to go before we close the markets. But I just want to point out here, we've had one news catalyst here Tuesday, wholesale inflation, and Wednesday is CPI at 8:30 a.m. Eastern Standard. So let's go to the next chart and look at the catalysts. Weekly charts, we're staying with the theme and the narrative of high time frame tells the story. And I want you to look at the bookends on the outside left and the outside right chart. The one in the middle is the VIX volatility. No real big revelation here, except we're not at the lows. On the left, though, what's jumping out and should catch your eye is highest dollar value in over a year going back to 2024. So we're way up here, 109, and we're knocking on the door of 110. We've already hit 110, and we did that this week already. 10-year yield, same thing, where the highest compared to down here, January 24, we beat the highest yield of April, and we're only less than a week and a half into the year of 2025. We've just begun. So these two things alone are going to really put a damper on any sustained bull rallies. And you need to pay attention to the high time frames and what they look like, not just the dailies, but the weeklies. I'm paying attention also to the VIX on a daily basis, but I'm giving much more credit to the dailies on the 10-year yield and the dollar index, because this is what's impacting people. Globally, the dollar is going to impact all the other countries in the world and the global population. Nationally, here in our country, yields are going to impact everybody. And it's going to have to do a lot with also this inflation, this stubborn inflation that's really not going down. So this is the cause. These are the charts. This is what's changed. And this is why we have a two-way market. So you need to have a plan. You need to have a methodology that's different than 2024. Otherwise, you're not going to have a robust ROI and take home as much money if you were just long only last year. You won, you probably profited big time, but expect a lot of a different climate change that's going to happen here in trading. If you're active in the markets, the risk on environment's totally already changed. And my bet, my narrative, and my reality says, yeah, I'm planning and expecting and happy that we're going to have a two-way market. Finally, that's the way I'm thinking. So base hits add up, and let me explain my payout today. 9:47 Eastern Standard Time, I was out. 2-day total payout, 2.26% on my net asset value. Again, I'm not playing with a huge dollar account. It's not a prop account. It's my own money in a licensed brokerage account, futures only on this one. I'm not trading options this week, but I'm not going to say I'm not, but I'm just saying these 2 days, I love a Tuesday paycheck, 2.26%. That's going to pay for some groceries for the next couple of weeks for sure. And it's paid out, and nothing's better than a payout. So now we've got the CPI. So the next portion of this video is going to highlight with timestamps what I was thinking, what the charts were at, how the big price displacement happened when the wholesale price numbers came out, and what I was thinking. And the whole idea was I already put the time in trading London. I just was trying to put the finishing touches on, get a paycheck, and basically have a runner team on. Not swinging for the fences here, especially when we've got a catalyst day with news. So strap in, watch this post, and this is how, again, hopefully it's helping some of you that are active every day. You plan the day, you plan the trade plan. And this is why, again, I was preaching about the two-way market. We had been going up on price action, front running the wholesale PPI number. And I expect that they're going to do the same thing for the Wednesday, because the Wednesday is the retail inflation number, okay? So why wouldn't they try the same playbook and front run that too? Same time, 8:30 a.m. Eastern, CPI for Wednesday as was Tuesday. Next week, which again is going to be a shortened holiday week because of Monday. But just want to again go and prepare you for the next few minutes on what we were looking at prior to the producer price index news catalyst. Here we are. The time is 8:27 Eastern Standard, so less than 3 minutes to go. And here is where the dotted line is on my runner. So I've closed most of the position out, and I'm on the verge of getting a paycheck here, and it's not even RTH open, and that's the way I like it. This blue rectangle was the original open range gap. And again, I already covered the high at 59.13.5, and now we're below 58.78. So I've got a 15-minute fair value gap. I've got the new week open gap. That's critical at 58.64.50. And then this gray box, this is the afternoon PM open range from 1:30 to 2 p.m. Eastern Standard. What do we have below that? We've got a first present fair value gap way down here at 58.20. But if I'm going to let go of this runner, and it's just a single runner, one contract only on a micro, and it's going to pay handsomely if it hits my take profit. Otherwise, I'm going to hope that price goes way up so I can short more. But I'm holding on to this runner maybe into Wednesday's CPI. But the price is 58.46.50. That is my take profit. So that's a ways below. And my basis is 94.75, 58. 94.75. I've done the bread and butter. I've already locked in profits and taken them. And this is the secret weapon now, the runner. So we're 8:29, 23, 24. We're counting down in seconds here to the PPI. I'm going to switch to a 1 minute here. So we're going to go to here to a 1 minute, and I'm going to take all this lipstick off the chart, and we'll just look at pure price action. So up here is the high, and here's the TP. So I'm fine with having it go against me. It's just a single, and here it is. Boom. You can see here we go. I'm going to pause and take a position. Okay, we're after the fact. We're in the macro 8:50 a.m., 8:50 a.m. Eastern Standard. So we're before the RTH New York Open. And what I've got marked off on the data dashed line was London high at 1350, and then the high on the PPI news catalyst that comes in at 18.75, 59, 18.75. And here's price currently at 5908. I've got a runner team short around 5908, but with very low leverage, only 20%. I'm not going to do a thing with that unless I take off, and that would be down here at 5888, and either all or partial. And then the second would be the sell side liquidity down here with the second dashed line. So that's coming in around 58.75 and change. I like my position and location. I like the time. I like that I'm not over leveraged. And the good thing is I did the hard work in London, and now I should just do one more closeout trade, but I'm attributing everything to trimming and trading around a position. And that means basically some of my trades have been losses. They've been small, 2 handles, 3 handles, and I've traded that for 10 and 15 handle wins. And again, all small leverage. So that's the point. I'd like to get a Tuesday paycheck and get that done as soon as possible. And the methodology here is time first, price second. And the next time to watch is going to be the New York Open, 9:30 a.m. Eastern, and see what we do in the open range, 9:30 to 10. And I'll be looking specifically at a 10 to 10:15 to either add if we're way above 59.30s, or I will do nothing and wait for it to go. But I can afford to hold that overnight, and I could, and I will if it makes sense. But right now it looks like this one bar here on the 2-minute chart, this is what I'm looking at. And so this was the big price reaction bar on a 2-minute chart. So that's quite a big, large fair value gap. And I want to see if that's repriced at least to 58.88. So that's my summary. The time is 8:52. We're inside of the macro, which will go 8:50 to 9:10. And then, of course, the New York Open. So let's see what the macro delivers. Book a discovery appointment to see if one-on-one trade coaching and chart analysis is a right fit for you. Coach Craig, I've got 30 years in the industry helping clients. The one-on-one coaching is something that's rare, and you usually don't have that happen. It's an intensive, it's at least a 6-month term meeting once a week, 3 weeks out of 1 month. We go over timing, trade location via trim and trading technique around a core position, using modest leverage, patience, knowing when, how to cultivate patience to wait for your setup, having a trade model setup, and then, of course, the focus on your ROI, return on investment performance, because isn't that what it's all about? So book your discovery appointment to see if it's a right fit for you. Aloha and thank you.